All right, welcome back to the Know Your Numbers REI podcast. This is your host, Chris McCormack, and I'm excited to be bringing you this special edition of the Know Your Numbers REI podcast, where we're talking about the 5 things that you need to do before year end. Now, before we get started, let me just say that if you get any sort of value out of this, please do us a favor and leave a 5-star rating and review. If you're on iTunes or Apple Podcasts, go ahead and leave us a written review telling us what you think about the show. We will see your comments, and it also helps you get your feedback to listeners similar to you who are looking for strong tax insights and might be concerned around their tax burden and just looking for the right expertise to point them in the right direction. And we know that there's a lot of people out there that are struggling to find the right insights, and we enjoy getting in the ears of new listeners. So if you know somebody who could get value out of this, go ahead and share it with them, because there are extremely important insights that we'll be discussing today on the 5 things that you should do before year end. Because if you've looked at your calendar recently, you know that it is now December, which means that you have less than 31 days to get yourself properly prepared for the tax season. And if you are not new to this show, you would know that we talk often about the mistakes that people make when it comes to their tax and financial life. Taxes are the biggest expense of your lifetime, but they don't need to be. Too many Americans are spending too much money on taxes, looking to cut costs elsewhere without doing the simple task of proactively planning and meeting with a qualified tax professional. So when we're discussing these things, we are putting a lot of responsibility on you to reach out to the right people, make the right moves. Again, remember, this is just a generic, unique, more distinct, more specific tax advice. Please be sure to reach out to your tax and legal counsel. If you don't have a tax advisor, reach out to us at Better Books. You can email myself or Jasmine at betterbooksaccounting.co or fill out our web form in the description on our website. So with all that in mind, we can get started with the 5 things you need to do before year end to save on tax. The first thing might sound a little obvious, but so few people do it, and that is meet with your tax advisor. Now, notice I say tax advisor and not just tax accountant. There are so many accountants out there that are tax accountants, and all they do is prepare your taxes. Chances are, if you're listening to this, you've dealt with these types of professionals in the past, and it's no surprise because tax accountants traditionally have been in the business of preparing taxes. They've worked with everybody and anybody, and they've taken on thousands of clients, and it spreads them very thin, and they can only meet with you once or twice a year. You know, when you're meeting with a tax preparer, you might hear from them once or twice a year, and it's usually, can we have your documents? And then the second time would be, here's your tax return and your tax bill. Go ahead and pay it and revisit us next year. No, that is not the way we operate here at Better Books, and that is not the way that the best tax professionals operate here in the United States. You need to be working with a tax planner. You need to get on their calendar here in December. Now, mind you, if you're just starting to think about things, you might be short on time. There might be limited space on that professional's calendar, but it doesn't hurt to ask, and it doesn't hurt to try to get a meeting on the calendar, because you're going to want to know what you're looking at from a tax bill perspective and what you can do to save on tax, and the right tax professional will be able to do that. Another thing here is to meet with somebody who is specific to your industry. This is the Know Your Numbers REI podcast. We are a real estate tax planning firm. We help real estate investors who are frustrated with their tax burden. They can't seem to get the right tax advice. We help alleviate that stress and overwhelm that comes with the topic of taxes by simply proactively planning and giving you advanced tax strategies so you have confidence in your decisions, knowing full well that you're keeping more money in your pocket. So again, meet with your tax professional. Make sure your tax professional is specific to your industry. That's action step number 1. Take that step today. The second is, again, might seem obvious, but you would be surprised how many people are in this boat, and that is get your books in order. Maybe you don't have your books in order. Maybe you've been running all year long trying to acquire properties, manage properties, find tenants, evict tenants. Whatever the issue is, we find so many real estate investors. Could be you, might not be you, might be someone you know, but they don't have their books in order, and this is a headache among headaches when it comes to tax time. Not only that, but you're missing out on key tax strategies. If you come to me and you don't have your books in order, I can't tell you what you're going to owe. I can't tell you what you're missing in deductions. I can't even tell you the strategies that you are not making use of because your books aren't in order. And that's rule number 1, is we need to be able to see income, expenses, bottom line, and we can only do that if you have up-to-date accounting and bookkeeping. Now, if you don't have your books in order and you're stressed on time, reach out again to to a real estate tax professional, real estate accounting professional. We do handle a lot of bookkeeping here at Better Books. It is actually how we started before we even offered tax services. So we have high quality individuals who can get your books cleaned up in a timely manner so that you can get it done and then also still have time to make these proactive decisions to save on tax. But again, this is a very urgent decision that needs to be made right about now. Again, we're pushing up against the timeline. At the time of recording, we're just about to start December. When this gets released, it is already December. So again, get your books in order, reach out to somebody who knows how to do accounting and bookkeeping for real estate or whatever industry you might be in, and make sure that they're high quality, they're qualified, meaning they have high degrees, CPAs. Here at Better Books, we have MBAs and people just specializing in accounting and tax. That way you know that they're going through your books with a fine-tuned comb. If you're missing out on deductions, they'll be able to bring that to you. If you're mixing business and personal, they'll bring that to your attention. And ultimately, they'll come with findings around what you're set to owe and some things that you can do to save on tax. If you come to Better Books, you don't have books cleaned up, we will add that in as part of our value and service to you. And we love to do it because we know that books and accounting can come with some great overwhelm. They cause stress to just about every business owner. Not everyone understands it. And so we bring you some peace of mind, eliminate that overwhelm, and clean up your books. Action step number 3, what you should do before year end. This one is, maybe you know it, maybe you don't, but tax loss harvesting is basically you have stocks in your portfolio that are in a loss position. You've held them for longer than 1 year, what the IRS refers to as capital assets of the long-term capital assets. So if you sold them, it would be a long-term capital loss. Now, the Internal Revenue Code allows you, the taxpayer, to offset $3,000 of your ordinary income. This is income that comes from business or W-2. They allow $3,000 of that to be offset by capital losses, no questions asked. Any capital losses over and above that get carried forward. However, because you're real estate investors, because you're buying and selling properties on a regular basis, chances are you might have some capital gains that need to be offset. Tax loss harvesting is a great opportunity to not only take advantage of $3,000 of potential ordinary income offset, but it is also a great opportunity to potentially offset some of those capital gains. Now, I will say there are some strict regulations over this. There's something known as wash sale, and the IRS oversees this to a very high degree. And so you're going to want to speak with an accounting and tax professional. Make sure you're following all the rules. These are not something that you should just take up on your own, because chances are you're going to make a mistake and you're going to be disallowed from taking any benefit because you didn't follow the guidelines, which really revolve around timing and the type of transaction it was. Option number 4, action step number 4 would be to speed up expenses. We say this often here, is tax deduction now is worth more than a tax deduction in the future, simply because of inflation. When you are able to reap the reward of tax savings, now it is like putting money in an investment fund and watching that thing compound. More money now gives you greater opportunity to reap a reward on that money saved. So if I have a $10,000 deduction, it results in a $3,000 tax saving. If I have that this year, that's another year that I can use to compound on $3,000, whatever it is. If it's stocks, if it's real estate, it's just the time value of money. So you want to speed up expenses. If there's an expense that you're thinking of taking in the next 12 months, you know that it's an expense that you're going to take. I highly recommend taking it in the current tax year, so before 12/31. Now, again, I preface this because we see a lot of people trying to make these decisions on their own, and it ends up being a bad financial decision. They lose money. Now they're in a bind because they owe a lot of taxes. They pay a big expense before year end. So again, the most important step out of all of these is meet with your tax professional before year end. Discuss these things. If he's a proactive tax planner in the real estate space or in the small business space, he's likely going to develop a tax plan and discuss your unique situation. He's going to ask you questions about your challenges, your dreams, what you hope to achieve over the next year, and he's going to be able to tailor your tax strategy to that. If you're not getting these questions asked in your initial meeting with a tax professional, chances are they don't have your best interest in mind, right? High quality tax professional is not just going to prepare your taxes or give you the generic tax plan if that's not what fits you best. He's going to, assuming you are cut out for it, give you an advanced tax plan unique to your situation that you can then use to go and make confident decisions, some of which might be taking the expenses in the current year. And the last one is the idea of considering retirement and other savings accounts, right? So 401ks are an option for a lot of investors, and the deadline to contribute to a 401k is December 31. So if you let that time pass and forget to contribute or put off contributing until January 1, you don't get the deduction in the current year. So if you're thinking about contributing to a 401k, you want to be able to do it before year end. Now there's things like IRAs, Roth IRAs, self-directed IRAs, HSAs. These types of accounts have different deadlines. You might need to put it off until April 15th, the tax deadline. But again, it requires you to seek counsel, find the right people that you can have the right discussions with, to make sure that you're making the right decisions, right? So many people get into tough financial circumstances because they tried to do it all on their own. I can talk about different industries trying to do it all on your own, right? Like if we look at sports, we know that there's people in the professional leagues that try to do far too much on their own and they're left without the championship ring. You know, it's the same as investing in real estate or starting a business. If you're trying to do too much on your own, there is a cap on what you can achieve. You're gonna make bad decisions. You're going to lose money. And all of that can be avoided by seeking the right wisdom. Now, I'm not telling you to go find just anybody and everybody. I'm telling you to find the guy that is unique or specialized in your specific industry. He knows what he's doing and cares about your dreams and goals. So again, the 5 steps that you can take before year end. Meet with a tax planning specialist. Again, this one is far and wide the most important because all of these follow. If you're meeting with a tax planning specialist, they're going to tell you whether you should take a deduction in the current year, whether you should harvest tax losses, whether you should contribute to a retirement account. And so this is the most important. Again, most Americans wait until March or April to talk with a tax preparer and they're left overpaying the government and upset about how much they're handing over. And I do not want that to be with you. So get a time on the calendar to meet a tax planner. It's kind of like going to the doctor, right? We would rather you go to a doctor and have preventative measures. So you're getting checkup, you're getting your weight checked, you're getting your blood checked, and they're going to be able to determine what's wrong rather than going to the doctor after dealing with stomach pains for the last 12 months and finding that you have stage 3 stomach cancer. We want to do preventative work rather than reactive work. For far too long, accounting has been a reactive industry, and we here at Better Books are focused on the proactive, especially when it comes to real estate, because too many real estate investors are overpaying on taxes. They're frustrated. They're grinding their gears, trying to get that next property, increase cash flow, decrease expenses, when in reality, the greatest expense of your lifetime is taxes. And you can do so much to eliminate the burden of taxes by meeting with a tax planning professional, getting your books in order, considering tax loss harvesting, speeding up expenses, and considering contributions to retirement accounts. But again, it comes down to meeting with your tax professional. With that in mind, if you are looking to be a client, we are open to having a discussion and seeing if our services are a good fit for you. Fill out the form in the notes or reach out to myself or my wife, and we will get you in the right line of business. I wish you nothing but the best. I hope and trust that this was valuable. And again, if you got any sort of value, leave us a 5-star rating and review. Until next time, God bless you and keep crushing it.